Okay, so welcome to this lesson on income statement analysis. I hope you've downloaded the file which has the case study in Excel. If you have not done so, I request you to go back to the previous lecture and download the attached financial analysis case study Excel file. Once you've done that, and when you've opened this file, you'll see three sheets inside this file. The first one is the income statement, the second one is the balance sheet, and the third one is the statement of cash flows. In this lecture, I'm going to teach you how to read the income statements of any company. We're going to use the example of Apple Inc. and we're going to understand how Apple has performed over the last 3 years. So let's get started. The first tool for analysis of any financial statement is called the common sized analysis. Before we go into the common sized analysis, let us quickly go through the income statement that we have with us. Okay, so on the income statement, we have data for 3 years. And as you can see, the net sales has gone up from 108,000 million to 170,000 million. And the cost of sales has also gone up. And you have your gross margins here, the various expenses, the operating income, income before taxes, income taxes, and the final net income. So we have the top line and we have the bottom line. So in order to understand these numbers, the first tool that we are going to use is called common sized analysis. In common sized analysis, all the numbers are reduced to represent percentage of sales of that year. So for example, all these numbers in 2013 will be divided by 170,000, which is the sales of that year, and expressed in a percentage. So let's get started. In 2013, let us divide the first figure by sales, the second figure by sales again, and so on. So you can see that this sheet has already been pre-formatted, and as you enter numbers, you'll get various color codes. We'll discuss them slightly later, but for now, you need to reduce all these numbers by the sales of the respective year. So I'm going to quickly do that. And this is what I get. Let me delete the unnecessary rows and cells. Okay. So first thing is we have the common size analysis of the income statement. So what we've essentially done is we've converted each of these numbers as a percentage of that year's sales so that we can understand how the pattern has been. Let us now have a look and let us analyze them. In 2011, the cost of sales was 59.5% of revenue. In 2012, it became 56, which is good because the cost of the goods sold is going down. And that is why you have an improvement in the gross margin. 2011 it was 40% and 2012 it is close to 44%. However, in 2013 things have changed because the cost of sales has gone up by almost 6% between 56 and 62, and that is why your gross margin has dipped by 6%. So that means there is something wrong here, some issue. Maybe Apple Inc.'s cost of production has gone up. Maybe it could be because the new iPhones that were launched in those years or the iPads which were launched in those years, the cost of production, the percentage of margin that has been added has undergone a change. Next, as far as R&D is concerned, research and development, it's been reasonably at around 2.5%. Same goes with selling, administration, and so on. So the operating income has come down from 31% in 2011 to 28% in 2013. Now that's a cause of concern because the margins are declining. We know that Apple has been doing extremely well over the past years, but this gives us a completely different dimension. Actually, though the sales have increased, it's almost increased by 70% between these 2 years, but the margins have gone down. So there could be issues with regard to efficiency within Apple. So same way, the net profits or the net income has also gone down from close to 24 to about 21.5. So this is the analysis of income statement. So the major findings here are that the cost of sales have gone up, and therefore the gross margins and the net margins have come down as a percentage of sales. Next, we go to another important analysis called the trend analysis. So the trend analysis gives you how Apple has been performing over the last 3 years. So in order to do the trend analysis, we are going to take the 2013 figures divided by 2012 and subtract 1. So which is basically current year minus previous year, the whole thing divided by previous year. So the formula is current year divided by previous year minus 1. Current year divided by previous year minus 1. And I'm going to drag and drop that for all the cells. Delete the zeros. So what the trend analysis gives a different dimension to the analysis. So we can see here that between 2011 and 2012, the sales have gone up by almost 44%. This is amazing because 44% is a big number. However, again in 2013, the sales have gone up only by 10%. Not as good as 2012. So year 2013 has been sort of an average because your sales have not gone up by much. At the same time, the cost of sales have also increased, as we found in the common sized analysis. Again, the gross margins have gone up by 56% in 2012, but a cause of concern here because the gross margins have actually gone down in 2013, which is represented here. Apple Inc. made $68,000 in 2012, while it made only $64,000 in 2013. So again, the last item, it is possibly for this reason that the net income increased by almost 61% between 11 and 12, but it fell down by 11.25% in 2013. So overall, the income statement has three major observations. One is the sales have shown a not so good trend in 2013. They have gone down. They have not shown a significant boost in 2013. At the same time, the costs have gone up in 2013 as compared to 2012. 2012 has been an excellent year because the numbers are really good as compared to 2011. But 2013 has been quite below average because the sales have gone up by only 10%. At the same time, the costs have also gone up at an alarming rate, bringing down the margins at a level much below than what was posted for 2012. So in this video, we've learned two important things. One is the common sized analysis. The other one is the trend analysis. It gives us two different perspectives to analyze the income statement. In the next video, let's see how a balance sheet is analyzed.